Welcome to the Texas Oil and Gas Podcast, the show dedicated to bring you the news from the oil patch deep in the heart of Texas, with your hosts, Ryan Ray and Josh Shelton.
And we're back with the Texas Oil and Gas Podcast. This is episode 135. Me and Ryan here doing a end-of-year recap with Sergio Chapa of the Houston Chronicle, and we're gonna jump in.
And Joe Dancy.
Oh, and Joe Dancy. That's right, Joe Dancy. Yeah, we have some good information from Joe, one of our great listeners and supporters, and love to get him on the show. He actually, Ryan, we get a lot of positive feedback when we have Joe on the show. Yep. So
not Sergio though. No positive feedback about Sergio.
No. Nobody likes Sergio.
Not a lot of complaints.
Except that one reviewer.
Yeah. Sergio's a lone fan, the lone wolf out there that loves Sergio. So, yeah. Real quick, so for the listeners' perspective, we record this on Friday the 20th, and so this podcast will come out on the 23rd. So. Keep that in mind. Anything that could change between now and the 23rd, 24th, whenever it comes out, is this is all, that. And a couple things, Josh. Sergio's, we've already recorded his interview, and we got thinking about it afterwards. He's only talking about Texas numbers for the Permian. So
That's right.
I think me and you were kind of mixing terms with Permian and Texas, but Sergio, to his credit, was actually repeatedly saying Texas. So we want to make sure that we made that clear that when he's talking, it is Texas. A couple things. We will have a show this week. We have Joe Dancy and Dan Stevens coming on next week. Mm-hmm. And then we will have Rob George to talk about Exxon and their big lawsuit. That would be January the 6th. And then Josh and I will be back January the 13th for regularly scheduled programming, I believe, is the next date, right?
Yeah.
And we should have an update on the Polar Plunge. As of this recording, Nate, we are how many away?
We are at 218 five-star reviews. We are 7 reviews
107.
away.
We need 107, right, Josh? It's 107. It's 325. So we're so far. You shouldn't worry about it.
Don't even worry about it.
Don't even worry about it.
You are lying,
don't even,
you guys. It was
don't even
225. Worry. I have you on the record saying that.
We do have 2 to read real quick before we get to our show. Let me pull those up real quick. And before we say this, guys, here it's really a question of, do you love us or Nate? It's us versus Nate at this point.
It's not us versus Nate.
It's not Team Ryan. It's not Team Josh. We're putting a truce on that battle until January 1. We need like a name. Like you got like Raylo and Benifer and stuff like that. We need like Rosh. So Rosh versus Nate. One side of the table versus the other. If you are on Team Nate, then you will send us to the lake in 2020. If you are on Team Ryan or Team Josh or Team Rosh or whatever you want to call us, you will hold those reviews until January 1st, and then you will pound them so hard that Nate will understand the amount of disdain that you have for him and that we have for him, and we'd really appreciate that. So January 1, let them flood in. Let's get like 400 or 500 to show Nate that you guys are on this time. Okay.
Listeners, the tactic of fascists is to drive a wedge between people and to exploit that for their personal gain.
We're just trying to.
This is not a divide between me and Ryan and Josh. This is a divide between us and you.
No.
And your desires. And your desire, as you have shown us, is to get us all into the lake.
No.
Carry it through. Make it a truly Merry Christmas for all of us.
Okay. Yeah. Okay. You done with that? Good. We have two. We have two reviews to read. One's Black Gold Dreamer, great podcast. Been listening for over a year. Great podcast. 5-star review. Thank you very much. Now there's 2 new hashtags. One's Polar Plunge, which makes sense. The other is hashtag Ryan in a Speedo. And I'm gonna be honest with you. I've been married for 13 years. I don't think my wife's actually ever said it to me. So this is not something that we want to see. But if you're not careful, you will get what you ask for, potentially. It depends on how cold it is. I'm kind of a sissy, so it depends on how cold it is.
This person's name is Black Gold Dreamer.
Black Gold Dreamer.
And they're just wanting a dream to come true.
And then we have Fracking Righteous, get them all into the lake. This is what we don't need. This is exactly what we don't need. 5 stars.
All in the lake.
Great weekly podcast to get the highlights of what's going on in the industry. Thanks to Josh, Ryan, and Nate. So the last 2 reviewers, we really appreciate them. We love our listeners, but they're not on the same level as Ryan as a podcasting god. They're probably newer to the show. Don't really understand the ethos of what's going on here. So we do appreciate it, but please hold those 5 stars until January 1, and then let Nate know how you really feel about him.
Get the God in a Speedo. Hashtag Speedo. Polar Plunge 2020.
Anyways, without further ado, Josh and I will not be closing this out because there's not much to say. We do wish you a Merry Christmas, and we'll be back, I guess, one more time before New Year. So I hope everybody has a wonderful Christmas, and be sure to connect on LinkedIn, and if you got any questions, or Instagram, and chat with us between now and then.
All right, we have our good friend Sergio Chapa. He's coming on the show today to give us some end-of-year reviews, take a look at some companies, and so great to have you back on, Sergio. I've been looking forward to this for a little while.
Hi, it's great to be back. Thank you.
End of the year, Sergio, 2019. We go into 2020. First off, thank you for coming on the show so often. We do appreciate your time and all the good work you do with the Chronicle. And we had a discussion here in the office the other day, and we're going to put this out here publicly for the listeners. I was on a call with someone the other day, I won't say who, and they suggested that you should be on the Mount Rushmore shirt if we get the Mount Rushmore shirt done. Now, I'm not going to say who suggested that to me, but someone with the name Sergio Chapa, I think, is kind of how that name. So we will put it out there to the listeners. Should Sergio be the fourth person on the Mount Rushmore? Now the problem really is that we have, if we put Nate on there, if we don't put Nate on there, then we have two spots to fill. But we put Nate on there, we only got one. So Sergio Chapa, a loyal and good guest, has I think he might deserve a spot on the Mount Rushmore. But Sergio, with that being said, I know you have.
That would be an honor, Ryan. That would be an honor.
It's still.
I mean, since I was competing against Donald Trump, right?
You weren't competing with him. Don't worry. Now, I did receive a text from you Monday night, and just so the listeners understand how you antagonized me, you've released a piece, the top 10 longest horizontal wells in Texas. And then you told me that your editor cut out the sentence that said the Barnett Shale did not have any of the longest top 10 laterals. I mean, why you got a Barnett Seamus? I don't understand. Why you got a Barnett Seamus?
Well, Ryan, it's in keeping on the market trends. There's a clear trend here that people are exiting the Barnett Shale.
Yeah, there is.
In fact, Devon just sold their holdings to private equity. $770 million deal. Now let's think about what that deal was worth 10 years ago when they entered the Barnett Shale. How many billions they bought it for versus how many millions they sold it for. But not shaming. It's just
hard hitting truth.
It's data. The data is speaking. Yeah.
Well, Sergio, let's get into it. Give us where do you want to stop? The top 10 horizontal wells, the top 10 drillers. I'll let you pick where we go, and maybe some surprises that you saw when you ran the data. And when is this data from? Because we're releasing this a few days from today, so
right.
So kind of for the listeners, they go look this up. They're like, oh, Sergio's wrong, but when this is captured as of when?
Right. So let's go through the top 10 drillers of the year.
Okay.
Here in the Texas oil fields. Now, of course, this is Railroad Commission data. It goes from January 1, 2019, and it goes through Friday, December 20th. So the Railroad Commission is going to be closed all of next week. That's December 23rd through the past Christmas, and then I think they're open for maybe one day on the 30th, and then closed again for New Year's Eve. And then New Year's Day. So, I mean, we can pretty much just call this data. And judging by the number, unless some companies file 100 drilling permits before the end of the year, these figures aren't going to change much. So part of the work, I know and your viewers know that I do a weekly column called Drilling Down, and it's looking at drilling permits across the state, based on filings with the Railroad Commission. And then we divide them up into places like the Permian Basin, the Eagle Ford Shale, the Haynesville Shale, and even the Barnett Shale. And then we also do a separate one for conventionals, but vertical wells. But, just looking at the data this year, there's a big upset, Ryan.
You think so?
There's a new king of drilling in the Lone Star State. And
it's not a Permian company. I mean, it's not a Barnett company, right?
Yeah, right. No. No, it is not a Barnett Shale player. Well, I think they actually were at one time a Barnett Shale driller, and then they got out of the Barnett Shale. But I'll tell you what, it's longtime readers of Drilling Down will know that EOG Resources, the Houston Oil and Gas Company, they were the number one company in Texas, filing hundreds of drilling permits a year, easily the number one top driller in Texas. Well, they've just been dethroned by XTO Energy, aka ExxonMobil. Yeah, and I know from listening to your podcast over the years, or over the past year, I know y'all have been tracking their progress in the Permian Basin and elsewhere. But they're not just active in the Permian, Ryan. They're active in the Eagle Ford Shale and the Haynesville Shale, and those 3 out of the 4 shale plays in Texas. So,
and what was the margin there, Sergio? How much did they pass them by?
So yeah, that's a good question. So one thing about Exxon XTO, I would say that like roughly 3/4, I think, and I need to look at these numbers again, but I'd say roughly 3/4. Anyways, a large majority of their drilling is in the Permian,
right?
Then a double-digit percentage for Eagle Ford, and then a single-digit percentage for the Haynesville.
Right. And just for the listeners, how many total permits are we talking about for XTO versus EOG?
Right. Thank you. It was 649 drilling permits filed by XTO this year. So that puts them in the number one spot. EOG filed, and it's a wide gap. That's why I was saying at the beginning of the year, these rankings aren't expected to change much. EOG only filed 507. So EOG is a 2 shale basin company. It's just Permian and Eagle Ford, but they've got some of the sweetest acreage in the Eagle Ford. EOG, they're in that Karnes County, the Karnes Trough. So their wells are prolific and very productive. So
142-ish wells more for XTO than EOG, which is it's a substantial amount, because I'm sure I'm looking back at your drill down report from this is July 8th. So for perspective, in July 8th, we have 1, 2, 3, 4, 5. Only 6 of the top 10 have over 142 permits, wells drilled by then. So 142 is a wide margin, and it's also a wide margin just as overall drilling goes. It's a lot more, substantially speaking.
Right, and so you can see that strategic shift in in drilling out there in the Permian, and that kind of correlates with another story I did, the other top 10 list, the top 10 drilling rig operators. It's no coincidence that XTO is the top drilling permit company, because they're also the top drilling rig customer. They're ExxonMobil, according to data that was exclusively shared by Enverus. They have 35 drilling rigs. They've contracted 35 drilling rigs across the state. So those 35 drilling rigs are constantly working, constantly drilling. And so, it kind of matches what we see with the permits. So, as you would expect, the company with the most drilling permits is also the biggest drilling rig customer.
Hey, real quick, Sergio, I know this for the listener standpoint, you didn't know we were going to ask you about this, but you brought up Exxon and the leasing of the rigs. We were told the other day that Exxon has announced that they are either going to, in 2020 or 2021, relatively soon, go to the e-frac rigs. Have you heard any comment on that, just out of curiosity? Because I heard that, and I tried to do a quick search of it, and I was just curious if you had seen anything on that. If not, we can go ahead and move on.
I hadn't heard that personally, but decarbonization and electrification of the oil field is a big issue that we're going to hear a lot more of over the next 12 months.
Sure. Okay. No worries.
So that wouldn't surprise me at all. So getting back to the top 10 list. So there's XTO number 1, EOG Resources number 2, and then this next one required a lot of math, Brian. It was Occidental Petroleum, which everybody knows as Oxy. So to get the Oxy numbers, and they were ranked at 3rd place with 487, just like 20 shy of EOG. But you had to add up Occidental Petroleum, you had to add in Anadarko, you had to add in Oxy Permian, like USA, and then Oxy Ltd. They drill under so many names, but it's, at the end of the day, it's the same company.
Right.
And so that's also another, 2 shale play basin player there, Permian and Eagle Ford. So 487. And now this is where things get more interesting after Oxy. We see one of the large independents from Midland, Diamondback Energy, at 398. So that's, again, another, 100 drilling permit gap there. So not going to really change the rankings. And then after Diamondback is Pioneer with 381, Pioneer Natural Resources out of Irving. And so they could upset the rankings if they want to file like another 17, 18, 19 drilling permits between now and the end of the year, just to get that fourth place, And then, the company owned by the Wildcatter billionaire Autry Stevens, Endeavor Energy Resources, is in sixth place with 285 permits. And I know you talked about it on the show, and I wrote about it earlier this year. But I mean, they that company Endeavor, they've done a big push, trying to, in that ongoing competition between the large independents and the oil majors out there in the Permian. This is a company that files like batches of permits, like 30 permits at a time, on a single day. I think I one time saw them file 100 drilling permits in a single week, just all recompletions, a couple years back. So definitely a relevant player in the Permian and here in the states, or in the Lone Star State. And then, after Endeavor, we have the oil major Chevron with 219. Then we have ConocoPhillips with 206. Then we have in ninth place Concho Resources with 192. And then rounding out 10th place is Encana with 186. So, you see a mix here of companies that are active in both the Permian and the Eagle Ford, and you just see some pure Permian players. So,
what strikes me about that list, Josh, is we kind of go through it. Some of those companies we talk about regularly, and some of those we don't hear about often. And one of the things we talk about on the show is that every company has their own strategy. Every company kind of does things their own way. Like ConocoPhillips, they're, I think you said number 7 or 8 or whatever they were, and you don't just hear eighth place. You just don't hear their name come out, but you hear Diamondback pretty regularly. It's interesting to when you see the numbers. You can take the numbers and say, well, these companies are doing things in a certain way, but then they're all kind of doing things where they're kind of the leaders, if you will, but their public personas are all different, because ConocoPhillips, again, seems to like to fly a little bit more under the radar than maybe a Diamondback does, or some of these other companies that you mentioned in Endeavor does kind of fly a little bit quieter under the radar. But I just find it interesting, Sergio, when you look at this list, it's not all big flashy names. I mean, ConocoPhillips is a big name, but you just don't hear them like you do some of these other companies.
No, you're right, and ConocoPhillips is you don't always they don't always get all these headlines, but I'll tell you what, actually, December 18th was an important anniversary for ConocoPhillips. That's the day 4 years ago, December 18th, 2015, President Barack Obama signed the omnibus bill, the budget bill that cleared the way for U.S. crude oil exports. Now I'm sure you remember that was a compromise. We get the industry, oil and gas industry, got crude oil exports, while the renewables got tax credits extended. So that was a bipartisan compromise. A rare case of bipartisanship in these times, but it worked. And so ConocoPhillips was actually provided the crude oil for the first crude oil export shipment in more than 4 decades. It came from an Eagle Ford well in Karnes County, got pipelined down to Corpus Christi, got loaded up at a New Star terminal onto a tanker. I think it was like an Aframax-sized tanker, and then sent to Europe. So ConocoPhillips, like you said, you don't always hear about them, but they're doing things behind the scenes, and they're a steady, reliable player with large production numbers and large drilling numbers. So definitely people need to pay more attention to them.
Okay, so final question about the top 10 for me. Josh may have something, but if you look at the top 10 from last year, you have, I'm going to call them off real quick, EOG, Pioneer, Endeavor, Exxon, Oxy, Apache, Diamondback, Parsley, Conoco, and Sanchez. Parsley Energy and Sanchez, Sergio, did not make your top 10 this year. Any idea of how far they fell in the rankings?
Yeah, let me pull it up real quick. Let's see here. Apache. Apache. Looks like they're in 12th place.
Okay.
And then Parsley is somewhere around 15th place.
Okay.
Sanchez, as you know, they went through a bankruptcy filing. Right. So let's see now. That really set them back a bit. I see them somewhere down. Let me add this up, because you got to add in their 2 operating companies. So right. In the 66 range, that would put them roughly in the 30s.
Wow. Okay.
Or maybe even the low 40s, high 30s, low 40s ranking. Okay. So yeah, that was a big fall for Sanchez for sure.
So as we go into 2020, be curious to see what happens with this list. We got these companies on here now, and some of these you feel like, your EOGs, your XTO, and ExxonMobil's, Oxys will be around, Diamondback. But, you never know what a year from now will hold, and that's a stark reminder of just how from one year to the next you could be in the top 10 and then, in bankruptcy. So
exactly.
You also released let's see here, it was the top 10 longest laterals, I believe you had, or what was the other top 10 that you did this year, Sergio?
Right. So there was the top, and this is all in, in collaboration with Enverus, the data company, oilfield data company Enverus. So they kind of opened up their data vaults, and we did a series of 3 stories with them. And so we did the top 10 longest laterals in Texas. We did the top 10, most productive wells in Texas, and we did the top 10 drilling rig operators and their customers. So
on this, I think Josh talked about this today. Henry Resources, that was the company we talked about the other day. The Henry Resources deal on here. Yeah, Henry Resources. That's another company you just don't hear the name of, and they have 3 of the top 10 most productive wells is Henry Resources, and they almost never make a headline, it feels like.
Right. They did celebrate they did celebrate 2019 as their 50th anniversary.
I think that's what we saw, something like that.
Yeah. That's probably the only headline that you saw maybe this year, and it was out of the Midland Reporter Telegram, our sister paper. And but other than that, I mean, it's talk about flying under the radar. I mean, they've got these wells, and this story with the top 10 most productive wells, it opened up a nice little debate online, on LinkedIn, in my email, everywhere. People talking about Enverus put this data together using their own proprietary algorithm, and a lot of people, were questioning, how they did that. But it's really tough to put these together because the way it's done in Texas is that oil and gas production is reported at the lease level, not the well level, not the wellhead level. So, to get these figures, you gotta get the lease level production, and then kind of look at when a well came online, and then see the spike and do the math and guess. But yeah, you're right. Henry Resources came out as 3 out of the top 10, and it's a small family-run company, one that's that's run on Christian values. So very interesting. They and how they interpret that to mean is treat their vendors, customers well, and how you'd like to be treated, and then also to zero debt, which is something that the oil field has struggled with over the past decade, I'd say.
Mm-hmm. Yeah, and so just I'll run through the top 10 real quick for us. We got Henry, Concho, EOG, Henry, Conoco, Noble Energy, a name we haven't heard here recently in the news, Exxon, Chevron, Henry again, and then Concho. So you have 2 companies that kind of stick out, Noble and Henry. We talked about Henry, as I mentioned already, and you have Noble. But everyone else is kind of names that, Conoco, you might be a little bit surprised because you don't hear them, but you're not surprised in the sense of they are a big company. But I guess it goes to show, as far as if Enverus is correct, at least, with that caveat, that bigger is not necessarily better when it comes to being able to produce good quality wells in the state of Texas.
No, you're absolutely right. So it's a couple things here. It's like geology, and then also the people that you have, the engineering, the drilling, the hydraulic fracturing, everything that goes into it. The teams that you build. I mean, you could have the best acreage in the world, but if you don't have a good team, you're not going to see the production numbers that one of your neighbors won't.
Yeah, and Sergio, what's interesting with this kind of data is, assuming it is right again, we hear a lot about companies not being able to be profitable, and that they struggle to make money. I wonder if Enverus is trying to tap into the market to sell to the banks and investors, hey, this is what these guys should be returning, because they can narrow it down, at least they say they can, to the per well basis. And so investors are start calling up saying, hey, why aren't you guys doing it like Henry Resources is over here, because they seem to be putting wells that are producing online.
I've seen a lot of companies do that with their prospects. Like they'll, when they're trying to land investors, like individual E&P companies, when they're trying to get investors for, a lease and drilling, I'll see them, like, well, our neighbor, such and company X, produce blank on this piece of land next door to us. It's actually very, I'd say somewhat common still, when it comes to those prospects, for people to do that. I mean, this data is public. Anybody can just look it up and find out, how much a lease is producing, or a company's producing on a particular lease.
Well, Josh, he's Barnett shamed us twice by not mentioning the Barnett twice. So we go to the longest lateral. And we already know, I've already told the listeners he Barnett shamed us there. He tried to publicly Barnett shame us there as well. Now you didn't bring up all of these companies that have offices in the Barnett. You didn't bring that up. You just omit that. It's like, oh, well, you Barnett folks, you Barnett people. But whatever. Let's go to the last piece of the year, Sergio, on longest laterals. I know the winner of this one because we talked about it on the show, unless it's changed, is Surge. Right. And I was told, I'm curious if you've heard this, I was told that they actually had one that was, I don't know if it was just as long or relatively close, but there was something they didn't. I can't remember the term I was told, but it's something like they didn't measure it the right way, or they didn't clock it when it had something like, it was kind of a technicality, but they should have actually had maybe another one that was almost in that same length. Have you heard that as well?
Oh, well, actually, Enverus took, settled. I think Enverus as a third party kind of settled that for us because, the way these things are calculated, there's total depth, which is, the vertical portion, the little angle portion, and then the horizontal portion, that's total depth. And then, Enverus with their algorithms, they did the math and with public filings, they're defining laterals here as the gross perforated interval, and that's just the portion of the horizontal well where they do the hydraulic fracturing and the little segments and everything. And so, as a tiebreaker, Surge Energies, still came out on top for their well in Borden County out in the Permian Basin. The Medusa unit still came out number one. So I think it's good there. But, they don't have, Surge Energy didn't have another well.
Yeah, so I had to go back.
One.
Yeah, so I'm curious. I have to go back and ask the person I heard that from what the distinction was there, because maybe I missed, but they weren't complaining. They were saying, they had another one that was really long, and of course.
Oh yeah.
Maybe it just got, maybe that one was really long, but it just got knocked down. But as we run through the list here, as you mentioned, you have Surge, which is a name that kind of made headlines. With this, and then also I think Enverus or Drilling Info, or whatever you want to call them, released like their top 10 privately held companies of the year, and they were one of them, if I remember correctly. But the names on this list are almost not name for name, except with one exception I think I'm seeing here, are names that we have not heard yet, right? Because you got Surge, Crown Crest, WPX, Patriot, Chesapeake, Exxon. There was Exxon, Parsley, SM Energy, BP, and Laredo. Sergio, this is a whole new crowd of folks that we've been hearing, and it's interesting because it's not, we've heard the volume of permits, which you could say, well, maybe you're drilling longer laterals, so you don't drill as many wells. But we also looked at the per well volume. Now, this obviously isn't the only indicator on which you could have a well, but none of these companies, from I remember, were on that list either, for what that's worth. And not necessarily it's the definitive statement, but it is an interesting observation.
Right. No, and that's what makes covering the oil and gas industry so fascinating, is that you can just look at it from multiple angles and just come up with different, data sets. You would expect, the top 10 drilling permit companies to be, on this list as well, but they're not. And or you would expect these companies and these particular wells to also be on the top 10 production wells. Why isn't, why aren't these wells with the longest laterals, why aren't they on the top 10 list? You would think they would. But again, it comes back to, a question of geology and engineering. I mean, if you're drilling into, a grade B rock, longer, that isn't someone with a grade A lease or A acreage could just drill a shorter well and get more, crude oil and natural gas out of it. But it's still interesting to see these links. I mean, you mentioned Surge Energy. It's when you look at their drilling permits, I mean, their total depth is in the, 20,000, 25,000 kind of range, but then when you look at the gross perforated interval, the section that's actually, hydraulically fractured, it's a smaller number.
Right.
It's still a large number though.
Right.
I mean, nearly 17,000 feet long. That's measured in miles, Ryan. That's, I know, it's 3 miles.
Yeah. That's a great thing, because you go 3.21. Okay. Well, what? That's miles. Okay. Hold on. Yeah. That's a lot of footage going under the ground. So, Sergio, this has been lovely, and we thank you for joining our end of the year recap show. So now we need you to predict for us what will be the constant WTI price from 2020. We need it within 5 cents, give or take.
5 cents. Yeah, well, I think I heard the number 5-star reviews, and I think that they're going to come in, and I think that Ryan Ray and Josh Turner are going to have to take the polar plunge alongside.
Wow.
Nate
Wow. That's dirty. That's dirty. That is dirty. That's uncalled for. That's uncalled for. I mean, yeah.
What was that hashtag, Nate, that had come up?
Hashtag Ryan in a Speedo.
Yeah. So if you that should be a deterrent. Like, that should be the deterrent. I will do it to you people. Don't make me do it. Okay, that's the deterrent. So, Sergio, as always, thank you for coming on. You have been a wonderful guest. Look forward to having you on. Right. And it remind me now, this is your second year at the Chronicle, right? Is that right? Year and a half? How long have you been there?
No, we're marking first year.
First year. So you have obviously done a terrific job at the Chronicle, just like you did at the Business Journal. So everyone, go check out Sergio's work. He is the best in the business, and we know that because he comes on our show. So it's like a self-validation deal. So when you quit coming on our show, you won't be the best anymore. I'm just saying. We're going to go ahead and label you something else.
Let Donald Trump down easily when I get on Mount Rushmore. Okay, please.
Hey, final question, serious question. Chesapeake, we could talk about them. They got their delisting notification. Josh has talked about the show, and you've seen some reports that they're talking about selling some assets. Any insight, or have you heard any rumblings about what we might look forward to as we go into 2020 with Chesapeake?
Well, drilling permit-wise, they look pretty solid. They look completely unfazed, Ryan, from what I can tell as far as their drilling permits go. Okay. I mean, they're continuing their drilling programs in here in Texas, relatively unfazed, I'd say. And, I've written about that before. They just shrug off that kind of news. They've got the drilling they need to do. They've got their production numbers they need to hit. Let's see now. Now, I know they did have a couple signs of life in their stock. Like, they almost got back to $1.
Almost got back to $1, but then now it's like a pump it up scheme, because it's kind of fallen off there. So I don't know.
Yeah.
Well, we will see.
I don't think we've heard the last of them yet. I don't think you can. I think that we're going to still see a lot of drilling permits.
Well, we will follow that story closely, and I'm sure you will be reporting on it at the Houston Chronicle. Be sure to check out Sergio's work. Yep. Sergio, have a good Christmas, New Year's, and we will talk to you in 2020. Thank you, sir.
All right, guys. Happy holidays.
All right, we have our guest, Joe Dancy, joining us again today on the show. He is with SMU Spindletop Fund Advisor and Professor, Southern Methodist University. Joe, it's been a little while since you've been on the show, man. I know been a lot going on. I've seen a lot of your posts on LinkedIn. Glad to have you, man. Look forward to getting into it today.
Yeah, thank you. It's been a lot of fun. It's been an interesting year, to put it mildly.
Yeah, and you were kind of running some posts, I think, earlier this year about how good of a year it's going to be for 2019. How did that actually pan out, do you think, in your perspective? Did it meet your expectations or kind of miss the mark or maybe blow past some of the things that you were expecting to see?
I hate to go back and look at what I was saying, but I tell you, the good news, oil price a year ago, West Texas was about $50 a barrel. And today it's like just over 60. So, I mean, that's a 20% move. So that's positive. And when I saw that, and we'll talk about the future in a few minutes, but I still think we have more to run. We're not going to go to 100, but we'll do better than 60. And essentially, the rig count, on the other hand, has gone from I think it was around over 1,000 to 800. So it's gone backwards, even though oil prices and most rigs, guys, they're drilling for oil. They're not drilling for natural. There are some that are drilling for natural gas, but the majority are drilling for oil.
Right.
So if you're drilling for oil and oil price goes from 50 to 60, you would think people would be happy. They'd be, pulling the rigs out. But as you note, and I'm sure I've listened to some of your programs recently, there's been a number of layoffs. A number of firms are cutting back on their capital expenditure. I mean, poor old Halliburton shut their Oklahoma office and laid, 800 people off, and a frac company out in Midland just laid off 115. I think Superior Services, I think was the name of it anyway. So that's not good. So it's not. So the trend, even though prices are up now, natural gas prices, I will admit. And of course, a year ago, I told you, and I still maintain that I think we have way too much natural gas. We have way too much problems. So I didn't see natural gas going anywhere. A year ago, it was like 250 an MCF, and now it's like 230. So it hasn't gone anywhere. I wouldn't touch natural gas with a 10-foot pole, investing in or equities or in natural gas wells. Just the only thing I would invest in that sector would be the processing area where you're removing natural gas liquids, which is a boomtown, or pipelines. If you have a pipeline, because of all the obstructions and everything, getting pipelines built out, a pipeline should be pretty profitable these days. But the interesting thing is, going back on 2019 also, this is actually going forward. There's a lot of folks now that are opposing natural gas. And natural gas is supposed to be, it's the wonder fuel. It's environmentally friendly. It's cheap. We have the Saudi Arabia of natural gas, and there are cities now in places other than California are starting to ban natural gas appliances. And it's like, my God, I don't know. I mean, I love to cook on natural gas. I have natural gas heat. I have natural gas water. I've had, and to me, electricity is all fine until you go and you realize that, most of our electricity is made by natural gas. So you can say, you can't have natural gas in your house, but you're going to be using it anyway because of the electricity. So on that end of things, I'm not surprised natural gas has not recovered, and I'm not surprised people aren't. I don't see a recovery going forward for them, but I do think oil led up to my expectations as far as prices, but activity has fallen way, way short, and that's a disappointment. That's a disappointment for a lot of people, including a lot of shareholders. And I think I sent you earlier a little chart that I looked up this morning because it's as a Spindletop. At SMU, our students manage part of the endowment, and it's not a whole lot of the endowment, but they let them buy oil and gas companies. And we have this board, and I won't mention some of the people on the board, but I mean, the board, you look around there, and I mean, I learned just sitting next to them and listening to the questions they ask is, oh my gosh, yes, those are incredibly, and then they'll elaborate on the industry, on the company. Half these executives they know personally. It's like, well, and the CEO of some huge company. Oh yeah, I was at the lunch with them last week, and it's like, geez. But even with that insight, our students haven't been able to do really well in the last year picking equities, even though they do a great job selecting firms. These firms are all profitable. They're all growing. They're all well managed, but the stock prices haven't responded. And I know partly if they were, our students have avoided natural gas, and part of the reasons they've avoided, natural gas is because we didn't our price deck. We didn't think it was going to go anywhere this year. We don't think it's going to go anywhere next year. So we're into oil, we're into services, we're into refiners, we're into a couple of pipeline companies, a couple of MLPs. midstream companies. And even with those, we really haven't done really the way we expected in the last year. And so that brings up the big question. And I posted it on LinkedIn this morning with the chart and just asked people as I look at this huge discrepancy. It's been going on since 2015 between the Standard & Poor's 500 and energy companies designated by, I used a couple exchange traded funds in the energy sector. And it's a huge underperformance both the last year as well as the last 5 years. And it's disappointing because what we try to teach the students, and this is like not only me, I'm probably the weakest professor at SMU on this, but we teach them when you analyze companies, you use engineering reports, and you also use what are called models and discounted cash flow models, where you put in your prices, you put in your production, you put in your costs, and you come back with a discounted cash flow. And what these models are showing is these companies a year ago were grossly undervalued, today are grossly undervalued. If you run the models backward, if you run the models forward, what they're saying is a lot of them are 50 to 100% undervalued. And these are relatively larger companies. If you run the models backward and say, well, what prices are they selling at if you would buy the oil? And the answer is like between $40 and $50 a barrel. And so essentially they're severely discounting the future prices. If you think oil is going to be $40 or $50 a barrel, what they're telling us is the stock price is priced correctly today. And so I tell the students, if that's sort of the bet you're making. You're going, and you'll love this. I sort of get them all excited. I said, every day you're sort of like going to Las Vegas. You're just analyzing the odds.
Right.
And so if you think oil's going to 70 and then the market's pricing in $40 a barrel oil, you pull out your wallet and you put a heavy bet on there. On the other hand, if you think there's going to be a huge recession, if you think China is going to pull the plug or we're going to pull the plug on China and oil's going to 20 or 30 or $40 a barrel, then, you don't make the bet. And our students are, I was disappointed. I wanted them to make their annual bet on where oil prices were going to go. And they usually do that about 2 months ago in our first meeting. And they did not do it. And they just adopted the year prior, what's called price deck or price assumptions. And because we were all, I wanted to hear mainly when they came out and said, hey, oil's going to, whether they're saying 70 or 60 or 50 or whatever they said, I wanted to hear the board that, the SMU alumni, I wanted to hear all the questions they would get and blowback and feedback. And we didn't get any of that. So but I have my own personal opinion as to where oil prices are going and where they're at. And I do think, at $60 a barrel, I think that's pretty fairly priced right now. I think it's a little bit low. I think we ought to be drilling. We ought to be drilling a little bit more at these prices.
Okay. Yeah. One of the things we talked about is the DUCs, and so the DUCs in production and the rig count. So the rig count has fallen. The DUCs have got to be falling. The production at some point has to go off. As we look back over 2019, we hit a lot of production metrics, but now it feels like as we get to the end of the year, it's almost surprising that we were able to keep it up that long. Were you surprised with the way that all those various factors played out, that we were able to keep production numbers so high through the second half of 2019?
Well, I will admit I made a huge mistake in 2019. Part of it is, I won't mention the name, but there's a consultant out of Tulsa that we're really good friends with, and he was telling me, it's been about a year ago, actually it's almost exactly a year ago, and he said, Joe, he goes, what's going to happen? He goes, you have all these ducts, and he goes, what's going to happen as the Permian, as they build out the pipeline system? They said, what you're going to see is the pipeline system out there around June or July or May, the capacity is going to go way up. So they could take a lot more oil out of there. It won't be shut in. So you're going to see a whole bunch of those ducts because you're going to see a mad dash for completion crews. And he goes, there'll be people, there won't be enough completion crews to complete all the wells. And there'll be a huge jump in production. And I bought off on that. And I figured starting in June or July of this year through right now, it would just be a continued frenzy in Midland while we try to complete all these ducts because we have the takeaway capacity, and that hasn't happened. And as you know, I mean, we just mentioned, a number of service companies, completion companies have actually cut back and laid people off. So it's not positive, and it's not really positive short term going forward either. But so I am surprised, and I do think, and you mentioned it, at 800 rigs running right now versus the over 1,000, the 1,100 we had, I don't think at 800 rigs we can maintain production. And I've heard this from a number of people. That's not my own, it is my take, but it's also the take of a number of others, that if, we need about 850 rigs to keep things level, more or less. We're at 800. I haven't got the rig count today. We're down 26% year over year, which if you told me that a year ago, if you told me two facts, we're up $50 to $60 on prices, and we're down 26% on rigs, I would have, that doesn't make sense. And but that's where we're at. But going forward, I do think with the current rig count, I don't think we're going to be able to. I think people are going to be very disappointed in any increase we have, if we have any, in the next year in oil production. And I would not be surprised to see a decline. And I would not be surprised and I think the global economy is going to continue to grow. I think we're going to see oil prices go higher because you'll see global demand go up by about 1 million barrels per day, which it normally does every year, year after year after year. And people are going to be shocked that the Permian, all the people in New York City think, oh, you go out to the Permian and you just throw the little valve and you can put another 1 million barrels on immediately. And it's not quite that easy. I mean, it's not a lot easier than it used to be, but it's still not that quite that easy. So I think we will see higher prices in the coming year. But to where we're at now, I'm real disappointed in the rig count. I'm real disappointed in the equity prices. And I can elaborate on some of the theories I have with why equity prices are where they're at. Other than I mentioned the concept that if you think oil's going to $40 or $45 a barrel, prices are correct, and so that's why they're where they're at. I have some other theories with regard to why prices are where they're at for equities, not oil prices. Oil prices about 60 is about right. It's a little bit low, but it's just about right.